Good morning, good afternoon, and good evening. My name is Trang, and I'm delighted to be back to be your host for today's Refinitiv Perspectives live stream. The COVID-19 pandemic has accelerated the pace of digital innovation in financial services as customers increasingly demand more personalized and digital-first experiences. The same digitalization trends are becoming increasingly apparent in the wealth management space as well, especially in the Asia-Pacific, which is quickly becoming the leading destination for high net worth individuals with growing investment needs. The same trends and findings were revealed by a recent Refinitiv survey, which polled over 500 investors in the region. And so I'm really excited today to discuss some of the key findings of the report and the latest wealth management and digital innovation trends with Medhy Soudi, head of FinTech, Customer Exchange and StartupXchange at DBS, and Bobby Bock, head of sales and strategy for Wealth Solutions APAC at Refinitiv. Welcome both.
Thanks,
hello, nice to meet you.
Thanks both for joining us here today. And I wanted to kick off our conversation with a question to you, Medhy, around the latest digitalization trends in financial services. I know this is a topic that's very close to heart for you.
Yeah, thank you very much for the question. I'm very glad to be here today. Few things that we have seen about the last year is first thing is for everyone's life was working from home. So we all experience a new set of software that we are using from home, such as a VPN, different software we can use remotely out of the office to continue to work proactively. And I think it was the biggest change that we have seen over the past 10 years. It was really interesting. But if we come back to something more related to consumers and private bankers, we can see in Hong Kong the rise of virtual banks. So Hong Kong has give the license to 8 companies who are now live and can onboard digitally on the phone in a couple of minutes any customers for deposit accounts, sometimes for payment cards or for loan approvals. We have also seen that Singapore and Malaysia are following that trend. So it's really interesting to see what will happen in a couple of months in Singapore and next year in Malaysia. If we were still speaking about consumer side, e-wallets and the rise of e-wallets in Southeast Asia, one of the biggest e-wallets in Vietnam, for example, Momo raised currency this year, and we can see more adoption in emerging countries about those kind of e-wallet payment solutions. If we come back to other countries, we will have also the rise of CBDCs, central bank digital currencies, where you have cross-border payment solutions developed between different countries, such as Hong Kong, Singapore, Thailand, China, and Dubai. And it's really interesting to see that you have a wholesale platform, but also retail platforms. Retailers will be interesting to see what kind of use case they can be developed on the GBA, so southeast of China and Hong Kong, with the Wealth Connect initiative in the future. And one of the last things we have seen as well is the adoption of platforms for investment. So right now, you may know that the amount of money invested on the financial markets is just above all the record before, above 2001 levels. And it's really interesting to see that a lot of robo-advisors or software platforms who help to acquire fractional shares of an equity are a new tendency and trends recently, but also the cryptocurrencies over the past year, where the level of all the crypto went to the moon, as people like to say, and we can see this kind of adoption of new software, new application, but also new product in the financial markets.
Thanks. Lots of food for thought, and I think we'll come back to some of these issues that you mentioned around cryptocurrencies and fractional shares. But before doing so, I wanted to turn to you, Bobby, to talk about some of the specific trends that are applicable to the wealth management space, especially because I think the report that I mentioned before has revealed that investors in the Asia Pacific tend to want more investment advice, but they're also perhaps the most frustrated with the current platform experience and perhaps also the least loyal. Just wanted to get your thoughts on whether, like, why this might be the case and what are some of the other trends that are worth looking out for.
Thanks, Ron. So I think Medhy actually put it in a very right perspective. Because of the COVID, a lot of the businesses or a lot of things are actually being handled on a virtual basis, meaning online. And this actually prompt a lot of banks, brokers to move their business from a face-to-face kind of business and starting to operate on their online portals. And because of this, there are much more feedback or comments actually coming back from the end customer, the end users of it, because they are always sitting in front of their desktop or just playing with their mobile phones or even tablets to look for additional content, data, analytics, or even news, just to making sure that they are staying informed and making a good decision when they're making the investment decisions. And I think just relating back to the reports, right? I think 1/5 of the population are actually looking to switch their platform within a year because of their poor digital experience. And again, this particular problem may not be too prominent before the COVID situation, but because I think many of us on this webinar actually read it on the news that many of the banks or online brokerage are having a surge in terms of new accounts being opened for the day traders or active traders to place their trades. And I think this is also one of the times of the moment that a lot of, I won't say problems, but challenges that they are currently facing when they're trying to navigate throughout the platform to identify or to locate where the relevant information so that they can actually look for it to perform that due diligence. So I think data, content, news is definitely something that they are really looking at to making sure that they make a good investment decision. But I think ultimately, because of this COVID situation, more people are actually spending more of their time and energy online. They are actually doing a lot of testing, so to speak, on all these platforms to identify what else can all these banks or even brokerages to improve on their online trading portal going forward, which I think is a good problem to have.
Really interesting. And I guess both of you mentioned more money being invested and also more accounts being opened. And yet I think the platform experience still being quite challenging for most providers. So I wonder, when it comes to perhaps learning from fintech companies that have been really at the forefront of innovation, Medhy, like what could, I guess, banks and other, I guess, online brokerages learn from these innovations?
Couple of things. I think the first thing is the new user experience, and everyone here has experience online services such as Netflix, Spotify, or maybe e-commerce platforms. We are used to have everything right now. It's really hard now to wait for services. And when it comes to investments, you still have the KYC process. So creating a user experience friendly for everyone to be onboarded in less than minutes, it's really interesting. We can see best practices from virtual banks here in Hong Kong, but also globally from platforms like eToro or maybe crypto platforms, where you can do your due diligence with your identity here. You put a piece of paper, the date, and you take a picture as well at the same time. This is interesting. Also, like, you come back to the core of the KYC process, and you don't ask a list of hundreds of questions. Otherwise, people will drop off before finishing the KYC process. I think that's what the software can and software companies can deliver to the banks and brokers. Another thing is the notification and gamification of every platforms. So if you have investment platforms or crypto platforms, for example, you can receive a lot of notification on your phone telling you which of those preferred items or assets that you have are going up or going down. And I think it brings a lot of way to keep engaged with the customers, to create the stickiness, but also to educate them about the different flow of money, about the different trends of the markets, but also about the different risk of these assets, because you don't have the same risk assets for bond, for an equity, or for the digital assets, right? So traditional banks and financial services can learn from this best practice.
Really interesting. And I guess you've touched on a really good point around personalization and I guess going back to your point, Bobby, around really content information being so important. So what do you think around what I think Medhy mentioned, gamification, personalization? Where are, I guess, wealth managers in this space?
I think they are still trying to really learn from it and to making sure that they are adopting it, because I think many points that Medhy have shared earlier on are really spot on. And just to add one additional point on it, a lot of the existing wealth managers that are currently practicing in the market, they are just trying to be more agile and also trying to be more nimble. So I think other than just technological stack, there's actually sitting at the back of their infrastructure, a lot of new processes and standards have to be in place to making sure that they are rolling out the state-of-the-art, or at least the more modern-looking the gamification features or even functionality on top of it. So a good example will be the user experience and also the user interface, because I think ultimately these are the first initial touch points between the banks or the wealth managers or even the brokerages with the client. And ultimately, people are just running out of patience sooner than or faster than everyone experienced in the past, because I think now we are just being trained to just have a lower tolerance in terms of response time. So a good example is in the past, if you're not able, if in the past you're trying to play a song on your CD-ROM or maybe on your hi-fi, most probably you have to go through the entire song before skipping it to the next track. But I think now with the new economy of consumption, meaning using like Spotify and stuff, you can actually just skip the track in the next 3 to 5 seconds when you're in after the introduction. So I think same tolerance level actually applies currently when we are trying to get everything onto the digital approach. So if the end users are not getting what they want in terms of their ideal experience on all these platforms, most probably they're just going to shut down the Internet Explorer or even close the application and just move on to another firm. So I think all this actually plays a very important role. And ultimately, it just boils down to the exact customer journey that the bank or the wealth managers are able to provide.
Thank you. And I guess my question then would be that I think both of you mentioned around speed and I guess seamless user experiences being so important and people really running out of patience. But how do you balance that out now with this increasing pressure on financial institutions to also combat financial crime and do enough due diligence? And I think, Medhy, you mentioned KYC. How do you ensure that it's short enough so people will continue to, with the onboarding, but at the same time that we manage risks? What are your thoughts, Medhy? And I guess after that, Bobby as well.
So I think one of the best practices is to break down all those questions. So for example, when you open a deposit account in different countries, the regulation is not the same that when you want to have access to a loan account, or when you want to have access to a credit card, or when you want to have access to financial services. So basically, what do you need to open a bank account and have just a deposit account with a bank? So when you come back to the most necessary document based on the regulation or the best practice is mostly a proof of address, a proof of ID, and a phone number and email. So if you come back to those points, it will just take a couple of minutes to do it. What is still challenging sometimes is reconciliation from your identity and your face. So you need to take a picture of your identity or a video of it, and same for your face. When you can match all this information and you have the address, the proof of residence from a bill utility and all those small information, you can open a deposit account. If you want to go for a credit card, you can maybe add a few other items requested. Same for an investor account, right? So you need to break down that user experience and to come back to something really soft, because if you take 30 minutes, people will drop, right? But if it's just 5 minutes to just have the open deposit account, 5 minutes to have a credit card, and 5 minutes to have another approval, people will accept to do it. And you also need to tell them at the beginning what they need to have next to them, because if they're on a train and they want to try it and they don't have the document necessary needed, they will drop off, right? But after, they need to come back as well. So that kind of easiness that I want to say, a seamless experience, that is the most important, but also in the same time approve all the different steps of the mandatory requirement from the regulators.
You're totally spot on. Because I do have a very similar experience just a couple of months ago when I was trying to open my online trading account with a bank. It actually took me more than a week. And when I actually tried to log on to a mobile trading platform offered by a fintech, it just took me less than 30 minutes. And Medhy, I'm totally with you, other than just all the legal regulatory documents for the account opening. A lot of these fintechs or even new age trading platform, they actually added in the gamification elements into it. So for example, if you are actually trying to prove yourself as an experienced trader with a bank, then most probably you will have to go through certain online courses, or even finishing a quiz, or maybe submitting your academic transcript, so to speak. But for my experience, when I've actually opening my trading account with a fintech, what they actually took me through is a gamification process, just to go through certain storyline or plot-based kind of scenario, and I just have to answer a couple of all these questions to making sure that I'm certified or maybe accredited as an experienced trader, and that is just a breeze. And trying just to answer you in terms of how the banks or even the online brokers are trying to strike a balance in terms of efficiency, time to market, and keeping the end customer happy while having all these paperwork processes in place. They should roll out the gamification element, meaning keeping the end customer so-called entertained while they are trying to sort out all the relevant approval, paperwork, regulatory stuff at the back of it. So I think that is a really good concept.
Okay, great. So gamification is key. That's really interesting to hear. So I guess we discussed a lot around processes and onboarding, but I was also very keen to hear from the both of you around innovations in terms of new products and what are the latest investment trends. And I know, Medhy, you touched on crypto and some of the other issues, but are you able to elaborate a bit further?
Yeah, in terms of investments, there is a couple of things we can share. It's we already half of the year of 2021. One of the really interesting aspect of investment that I've seen is NFT, the non-fungible tokens. And the sales of volume surged to do 2.5 billion of USD for the first half of the year. It was kind of interesting to see like a lot of amount of money going to those crypto assets, and especially on NFT where it's rated to arts most of the time. Also, I saw last week a report from Visa saying that for the first half of 2021, more than 1 billion was spent on crypto-linked card usage. It's really interesting because you have like some of the platforms who create a credit card where you can spend your bitcoins, for example, or the tokens. Very recent in Hong Kong, we have also seen that one of the virtual bank, ZA Internationals, adds digital asset capabilities on their bank account. So they did a press release with BC Group, who is a blockchain group in Hong Kong, and supporting a lot of banks and financial institutions in terms of infrastructures. But also we spoke about those new kind of assets that people like, decentralized finance. But we still need to keep in mind that China depends crackdowns on the crypto with central banks warnings. Some of the country are still really pushy against those kind of crypto assets because it's still super risky. When you buy a cryptocurrency or any kind of digital assets, you don't have an ownerships or a security based on a contract that you sign with someone, compared to maybe an equity or maybe a bond with the banks or another company, right? So this was interesting to see a new trend coming to everyone's. And like my father called me last week and I say, what do you think about crypto? Should I invest or not? I'm like, hey, just be careful, Dad. this is something you don't control, right? But I've also seen that Robo Advisor, especially in Hong Kong, had 300% or more new customers coming to the platform and investing money with them. So it was really interesting to see the trend about the last, the first part of this year, 2021.
Super interesting. Thanks for sharing. And Bobby, do you want to add, especially when it comes to wealth clients?
Yep. So other than these exotic investment assets or vehicles, like the digital assets, crypto and stuff, I think there are a lot of much more attention actually paid to the data content that actually help the wealth customer to pick the best of breed investment vehicles. So a data point of that will be something like the ESG. So I'm just drawing back to the report or the survey that Refinitiv have done previously. 48% of the surveyed population are increasingly enthusiastic about ESG investing. And just on top of that, ETF, the exchange traded funds, also is one of the key exciting growth area, because I think many investors in the region, in the Asia region, are actually attracted to this particular asset class because it actually allows them to provide specific liquidity or access into a given sector. A good example will be those electric vehicles or clean energy, and that actually formulates the next wave of thematic investment. because as you can see currently, I think in the exchanges that are currently trading, there are multiple ETF or even mutual funds that are very thematic based, that are focusing on technology, electric vehicles, or even clean energy. So just to writing it all back to the investment theme that everybody is actually favoring. And I think at the end, at the back of it, I think the wealth management landscape is also changing. Rather than just focusing on performance beating the market, they are also trying to be more aligned to their financial goals. So I think in the past, a lot of the wealthy clients or even the retail clients are trying to say that, look, my current portfolio actually beat the benchmark by X%. But I think now with the intergeneration wealth transfer, or even with the new section of the millennials actually coming into the investing market, they are trying to fit in their financial goals rather than just beating the market. So I think there's a gradual shift in terms of I want to beat the market, and now it's more towards like, oh, if I'm actually beating the performance returns, then most probably I will be able to own a second home, or most probably I'll be able to finance my holiday, or maybe I will be able to buy X, Y, and Z gadgets. So that is something that we do see coming along the wealth segment across Asia.
Okay, super interesting. And of course, you've answered pretty much my final question, which is really around intergenerational wealth transfer and really, I guess, this expectation from, I guess, younger investors to adopt a more responsible and hopefully also sustainable investment approach. So I don't know, Medhy, do you have any thoughts on this and what Bobby has shared?
All the points were really good. Maybe what I can add a bit more, it's not only on the investment, but it's also how banks try to have a comprehensive approach of every kind of customer, individuals and corporate, by leveraging on the data. Bobby, you mentioned a lot of data before, but it's how we can also receive some data from the partners who are working with. For example, for corporate, if we work with a software company focusing on accounting software such as Xero, ABSS, or Sage, how we can catch some data from that customers using that profile, sharing with us with a consent to have access to the P&L of the company, and be really proactively supporting them in terms of services. So maybe that company will have a problem on cash flow and will need maybe some alternative lending to pay the payroll of the employee for maybe 1, 2, or 3 months and support their growth even in a difficult moment for the company. It's something that the bank can come back with. Maybe it will be another needs that a consumer can have, but by sharing the data from different credit cards, for example, or other financial application with the bank can come back and say, oh, look, maybe you have this much of loans, maybe you have this much of investment, maybe we can support you with a loan for that moment here of your life, and it will help you to overcome maybe an issue of cash flow that you can have with you and your family if a baby is coming. And also, when you mentioned it before, investment goal planning, if you want to go to holidays, if you want to have a wedding in the future or pay for your MBA, how we can help you to support your initial deposit and monthly add-on on that kind of money, stock that you want to spend in the future for a plan.
Very good points. And just to write on this, right, I think I'm totally agreeing with you in terms of marrying the client's data with the bank's data. Definitely that is going to craft out the new dimension of wealth management going forward. And just touching on the intergeneration wealth transfer, just because the old rich are passing the money to the new rich, the demographics of the investor actually shift. So same goes with expectations and in terms of how they actually manage the data privacy. So I think in the older generation, they do value quite a bit on their own data privacy, on what they want to share with the banks and whatnot. And many a times in the past, they treat information as the king, as one of the commodities that they thought that is going to be superior, just because they have additional information. But I think now, given all these data privacy or even information are just being shared on such a common basis, they are actually trying to get all this information to spark off trade idea generation. So I think in the past, many of those trades origination actually comes from the relationship manager based on analysis of certain stocks, X, Y, and Z. But I think in the current times, a lot of the investors are looking at, oh, I would want to take a look at what other investment vehicles that investors like me, having a similar profile as I do, are actually looking at. And I will also take a look and perform a personal due diligence on that particular underlying to see whether I should be investing in it. A good example is, for example, if you're on those online shopping website, when you select one of the product, added them onto your cart, most probably on the right-hand side or at the bottom of the page, there will be a one-liner saying that buyer like you are actually looking at similar all these sort of products as an add-on. And I believe this is just a new way that wealth management is going to evolve going forward, because a lot of people are just trying to see individuals or even how the community of the investors are actually looking to buy that are having a similar, be it risk profile or demographics profile like myself, so that I can actually have a wider array of investment vehicles that I can look for.
Really helpful. Thanks so much to the both of you for sharing all of these issues. So I guess really tons of interesting points, but I think what really stood out to me is the need for speed and personalization, and of course innovation in terms of perhaps introducing more gamification and lessons learned from fintech and internet companies, and really kind of embracing content and news and what are the latest trends in the market. So Bobby and Medhy, thank you so much for joining us here today. I really enjoyed our conversation, and I hope you enjoyed the discussion as well.
Thank you very much for the invitation. It was really great.
Thank you.
Thank you. And do you have our wealth report that's available to download by scanning the QR code on screen now or in the link in the chat. And I look forward to seeing you at our next live stream. Take care.